Good afternoon to all of you, and welcome to this conference call. I think if you all, some of you have old memories. We were one of the few who told you at 10,500 that we will hit, new highs. Well, that slow offtake in the starting of 2000 gathered a lot of stream in March, and thanks to the foreign flows, we came and hit 11,856, very very close to 12,000. Yes, the breadth of the market was definitely very, very narrow, and the mid cap participated to an extent. But we had a huge global impetus, and foreign flows have been the best we've seen in the last 2 months. Almost $6 billion has come in. And today we are doing this conference call at a time when this week has seen maybe the worst bout of volatility because of, again, President Trump's tweets on the Chinese tariff and so on. Global markets have corrected very sharply, and so has the Nifty. From 11,856 we fell to almost
Excuse me,
5.
sorry to interrupt you, sir. Your voice is very low, sir.
Voice is low. इसको high करो voice को. नहीं voice. So we think that the way forward would be that there is now the global cues, the foreign selling because they bought very excessively and they will be profit booking. And thirdly, the elephant in the room would be the elections. However, let me give you the broader picture which we think will emerge once we are through this period of uncertainty. Firstly, let me tell you that there was a sprint which took us from 10,500 all closer to the doors of 12,000, and now we've retraced. Now I think the sprint has definitely going to turn into a marathon, which means that there will be slow and steady impetus because of three events. One, the global chaos. A, B, the earnings. The earnings have not, selective. Today you saw numbers from Asian Paint, you saw numbers from Voltas, you've seen numbers from Dabur. All have pointed to a weakness. Same is the case with autos, which have been the discretionary part. Extremely weak numbers coming after almost 5 years of huge outperformance. But we think a large part of that is already in the price. We think the next 2 quarters should see macros definitely improve once we are through and we have a stable government. The other caveat would be that we need maybe the Modi government continuing, or we get another concrete majority at the center, which seems to be 85% probability that a BJP led government will be at the center. And if Modi ji is back, I think the economy will definitely be much better placed going into the next 3-5 years. So the uncertainty remains till we get more color from Donald Trump and the tweets. By the way, historically, if you've seen it, he's always been like a bully, and then he comes down to when the talking time comes, there's a lot of moderation. I would expect this volatility to end maybe by next week. On the other hand, let me tell you the numbers. Last Friday, the jobs report in the US was the strongest in the last 18 years. And with no wage increase, which tells you that inflation is at the lowest and jobs are getting created. And by the way, last week also, if you watched, Microsoft became a trillion dollar company. It's the third company to join $1 trillion. Now, for 8 years, Microsoft did nothing. But in the last 1.5 years, it has gone up 3.5 times, which is telling you that large are getting larger and small and mid cap have done nothing. On the other hand, another observation was that the Russell 2000, which is the broader index on mid caps in the US, is definitely showing a lot of traction, and some select buying is definitely emerging there. That would correlate into our beaten down sector of mid caps and underperformers, which we think will get the green light once we are through with these elections, because three things will stand out. One, Capex expansion both on the government side and on the private side, which is waiting because of there has been inventory levels have definitely selectively fallen, and we think that Capex should be on the upside in select pockets of industry, mainly the manufacturing side. Thirdly, we think this whole fiasco of NBFC and the color of money which has got tighter is definitely going to get much better once we are through with a stable government, because the government will have the impetus to pump in more money and actually take away this dichotomy where bond yields are hitting 3-year lows, and here's that the pass on effect is very, very poor. and NBFCs are not able to lend. So I think that part should get cleared. The other caveat would be that earnings, which have been a missing a link in the last 3 years, have definitely seen some traction. Whether it's steel, cement, materials, or the corporate-facing banks, they've done extremely well. On the other hand, we are aware that globally there is a bull market, and I know fear is a very difficult time to buy, but then you are getting prices in your favor. And I definitely think that the broader market, once we are through with this, July quarter, should start to show a very, very sweet uptick on the back of proper macros, liquidity, and third, stable government, which will take away the elephant in the room of the elections. The fourth one would be that our demographics would definitely stand out. Right now, the demographics are seeing weakness in the three best areas, that is durables, discretionary, and staples to an extent, where paints, rubber, tires, all the OEMs and auto have been at the bane of weakness on the macros. But I think that's a passing effect. These have been huge wealth creators in the last 5, 7, 10 years, and I see no reason why they should not resume their uptick in the next 1 or 2 quarters. Similar would be the effect of a large part of the NBFC stroke banking phenomena, where we think that liquidity by the government and other measures would start to inflow, and as we see lower cost of money, it should bode well. Coming to the global events, even if we see the worst case scenario of this 10% becoming 25%, if I historically took some guidance from some overseas players, they've indicated that it would affect the US GDP by maximum 0.4 to 0.5%, and the Chinese data by 0.75 to 1. The Chinese data recently has shown a lot of uptick, and that would again mean that cheaper cost of money will remain, because this volatility will see maybe the Fed cut rates, where it has become extremely dovish and is keeping rates on hold, and we think the Chinese central bank would also pump in money. In the end, we think that the low cost of money will continue globally, and that would only mean better news for emerging markets, particularly the likes of China, India, Russia, and Brazil. So Indian demographics continue to be much better than the world, and we take it with a pinch of salt, 6.5 or 7 on the GDP. The other positive which we are seeing is that despite this volatility and rupee going to 75 and now back to 69, the gold has done nothing. Gold, bond yields, and real estate have done nothing. So I think SIPs are the new gold, according to me, because what people used to think of holding gold for their children, their education, and their marriages and beyond is now the SIP. And I think SIP inflows, which have been very tepid in the last 2 months, should start to see a large part of traction once the stability in the government and we see more on the economy. So I think SIPs are here to stay, and that would be the silver lining, that local flows would start to see resumption maybe in the next few months. And that again tells us financialization of savings is the new mantra, which this government initiated through the through the event of demonetization, and it is here to stay. So as we see over a period of time, inflows will be more and more constant, and maybe on the upper side, as more people start to realize that equity markets or equity as an asset class has to definitely be more. The other caveat would be the elections. Now there is, when we go to 11,700, they talk of Modi ji returning with a majority. When you go to 250, 300, today again there is talk that there will be a third front and disaster. But I think most of that is not in the realm of rational thinking. Unless we do get something like a Mayawati as the prime minister, I would be very, very surprised. I think the markets will digest that. By the way, our markets have been extremely mature. If you realize that when we had the assembly election results, and that day was a double whammy, given that the Fed, the RBI governor resigned, the market dipped for just 2 hours and was up and running. So I think these dips will definitely be buying opportunity. Globally, also, India stands to be one of the better beneficiaries of FI flows. And now the silver lining would be stability at the center, which will promulgate a lot of growth and so on. The other positive has been that IBC and the NCLT have been very powerful reforms, which you've seen in the results of the likes of ICICI, Axis, and now SBI, which is expected. That large part of errant promoters have definitely been brought to book, and across the board they have been settling a large part of the accounts, which means that asset quality weakness and asset ownership will definitely bode well for banks and the lending cycle going forward. Now that means that the next 1.5 years will see a large part of the cleansing taking process, but the next 3 years could be very, very bright. In fact, I can be on record to say that after October, November, I can only see a very, very bright bull market, with the mid caps being, the flavor of the season, month, year, and the next 3 years. So my call would be that it's very difficult to time yourself on the downside because of the election uncertainty and this global. I thought maybe 11,000 to 11,200, but that may not last long. We are now within less than 2 weeks of our election results, and if we do get the best possibility of Modi ji and BJP with a maybe a slight coalition, it may work wonders for the market. Remember that a coalition government in Indian economics has worked very well, because checks and balances on a large part of the performers will see them perform better. Last time we just had 4 ministers who were in the limelight, and a larger part's efforts went unnoticed. This time, if there is a coalition, there will be more checks and balances and better performance on each person on the ministry level. So the best case would be that if Modi ji returns, I definitely think, given the rationality of a global event, we would definitely have a shot at 11,856 and beyond. So 12,000 to 12,200 does seem to be the level which we could see once the election verdict comes positive. And if we do get an uncertain event, then maybe 10,800 or 10,900 could be the floor for the time being. What again we have to look at is maybe the sprint is done from 10,500 to 11,856. Now you have to look for the marathon, and the marathon means that a large part of the underperformance of mid caps. See, mid caps do this once in 3 years. 2017 was the best year you saw in mid caps. 2018 and half of 19 has been disastrous. But we think that now this 1.5 year cycle is over. You should only see upside, given that macros all on the basis of yields, rupee, and cost of money are set to fall. We've already seen the rupee being one of the more strong currencies at a time when the dollar has been strong. And gone are the days when 72 and 73 were ruling the roost. I don't rule out 68 being tested if you do get a favorable government at the center. The other positive would be that we have seen a large part of the cleansing, and this market has been very discerning. The 20 top stocks have continued to gain market share, whereas the losers have not made any attempt. And the errant promoters, whether it's DHFL or the ADAG group, they have got slam dunk, and market has been rightly so. So the idea is that please keep a large part of your portion in large caps or select mid caps where visibility is there, and hence I think index based funds would do very, very well. Despite our trying to tell you stocks and all, they may be huge sometimes gyrations in underperformance, which was evident that at 11,856 also there was select mid caps could not even make it to their previous near their previous highs. So I still think that the index or mutual funds are the best way, and SIPs is what as intermediaries we should be promulgating more, because the more people get a SIP and they look for the next 3-5 years, the more will be their creation of an asset class. The other thing would be that I think if I could take 4 names, there would be 4 C's. So it would start with cement, given that Ultratech, ACC, Ambuja all have come out with good numbers, and at a time when the quarter has been weak, which means that the construction activity, both commercial and local and residential, is gathering steam. The other part would be that Capex. Capex is definitely seeing an uptick. L&T, ABB, Siemens. You've seen that whole gamut of power stroke Capex expansion take place, and we think that will get a further fillip once the government is in power and they can promulgate more reforms on the infrastructure side. So cement, Capex, and third would be construction, which I think would be again correlating to higher cement offtake. And construction has been at a standstill, but now with RERA and a lot of the shifting from demand supply of real estate, I think select construction companies like the likes of Godrej, Shobha, Prestige, or select even DLF, they should start to see much more traction on the upside. And fourth would be corporate banks. Corporate banks have been huge outperformers, and I think they can continue because their CASA ratios have improved, their asset qualities have been better, and we think that going forward they would see credit expanding at much better pace than select NBFCs. So these four C's could be standout, cement, Capex, construction, and corporate banks. On the broader market, like I told you, FIs have bought in $6 billion worth of money. And because of the volatility, see, even they are human, and fund managers also have to undergo the psychosis of fear, which is being played out globally. And you've seen that FIs have been, sellers in the last 7-8 months. Only the impact of the selling has been that, mid caps have not been able to selectively outperform, and that is a point of worry. But I think the selling may be over, and I think next week onwards, definitely, at least for me, the old adage is sell in May and go away, and that is what has happened in the first half. But I think the second half, particularly from the 15th onwards, globally you should see a lot more stability, and I think equity as an asset class should start to outperform. For us, like we said, the elections would be the other elephant in the room, and there we have a whole gamut of people coming out with the permutation combination. I still think that the era of coalition politics may play out well. We think the BJP with 240 seats and 290 on the NDA could be on the cards, and we'll take it from there. But like I said, you have to look at 12,000 and beyond, because 12,000 may not depict perfectly your portfolio, which is underperformed maybe massively. And we think that that underperformance in the next 6 months is definitely coming to an end. So my call would be that end of October, November will start the new bull market. And on a global context also, I'm extremely bullish. If you speak to some people in the US, they are saying that the economy in the US is rearing. And President Trump is so daring because he sees that the US will be able to win on a lot of the rhetoric, given that they are seeing strength in their own economy. That is a true capitalist economy. They always work for money, and they realize that corporates have to be part and parcel of the wealth effect which is created there. Like I said, we are looking at the third $1 trillion company, and in India we are just still gangling with $200 billion companies. So I think there is miles to go, and the marathon can only get more firmer, given that a large part of the different sectors will see at least $100 billion companies maybe in the next 2-3 years. So we continue to think equity as an asset class is here to stay. Gold, bond yields, and real estate have done nothing, and there is over ownership. People are definitely looking at SIPs, and like I said, my mantra is SIP is the new gold, which means that if you are planning for your daughter's wedding, her education, or your children's future, all of you are more diverted towards creating SIPs through the mutual funds, which will play out wonderfully. We've given you some numbers on the benign on the liquidity, which definitely is tight, but we think going forward, once the government is back, they will be able to initiate a lot of measures. Shaktikanta Das ji, who's been the new RBI governor, has been able to pass on a lot of the effect, but we still think that the ILFS gap is left a void, and that is where the problem is. So we are of the view that select stocks, select sectors will do very well. These are 4 of the names which we've given, and I think now we could maybe leave it for question and answers, and in between we can come back with more things. So I'll ask the moderator now if we can take select question answers, and I'll try and fill you on in whatever your queries are, so that we can look forward. But the mantra remains that please look at the next 6 months and beyond, because this present period of 3 weeks or 4 weeks may be unsettling, but again will be in your favor if you can buy the fear.
At this time, participants, if you wish to ask a question, please press 7 1 and then star on your telephone keypad and wait for your name to be announced. I repeat, participants, if you wish to ask a question, please press 7 1 and then star on your telephone keypad and wait for your name to be announced.
जैसे ये सब क्वेश्चन पूछ रहे हैं, उस पे जवाब नहीं देना.
and wait for your name to be announced. We have a question from the line of Rajan Kansara. Line is unmuted.
Sir, I have a question. Currently, as you know, the situation of the trade war between US and China is going on, and market is really hampered from the top of the month. And I just wanted to ask what dip you are seeing from in the Nifty from current level.
So see, it's difficult to give a technical target because technicals are always going to be bearish. 10,900, 11,000 is something, but this may be a flash. A large part of the correction is over. आपको मैं और बताऊं, if you saw the fall on 21st of December, the Dow hit 21,712 when this Chinese war and other things were again cascading. And from there, you had a rally of 22%. 22% on the Dow, 31% on the Shanghai index, which told you that the market had got so deeply oversold. And it tells you that the left out feeling is so large in global equities that all falls are bought. We know that this rhetoric has been a constant, every 3-month episode, which it comes and goes. But I would definitely think that we are closer to the bottom rather than more correction. On the Indian context, yes, the rumors are going to be strong on the government and XYZ, but this is rumor mongering. You should look at, like I said, the next 3 weeks, 3 months and beyond. And if you can keep a window of October, November onwards, I can tell you will be laughing your way to the bank, because the markets for the next 18 months are looking very, very strong, with the broader market outperforming.
Thank you very much, sir. Thank you.
Thank you. Once again, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad. I repeat, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad and wait for your name to be announced. Participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad and wait for your name to be announced. We have a question from the line of Mr. Naik. May I speak, sir?
Yes, sir. I already listened to your comment regarding market situation and all. Like everywhere, Reliance Industry and Maruti Suzuki and SDFC Twins, the kind of correction is happening. Is it right time to accumulate these heavyweights, or what is your opinion?
Definitely, these are brands which have taken years to build, and they've been outperformers. Whether it's Reliance or the HDFC Twins, you've named all the three, huge wealth creators, and I see no reason. They have been always leading from the front. In fact, today there was a downgrade on Reliance, but these are all brokerage calls. Reliance, if you have seen, for the last 8 years did nothing, and in the last 2 years it's gone up 3 times, which is why I told you that look at Microsoft. It did nothing, and in 1.5 years it's up 3.5 times. So I see no reason of not buying these stocks. Rather than that, do a sip on a weekly base for the next 6 weeks, or try and buy, on every fall. Maruti is a pure case of a brand where we know that they have cut down on production. There has been problem on sales, but it owns 53% of the passenger vehicle market. We've seen a lot of competition be there. We've seen that there is a slowdown, but that is temporary. Our aspirational levels, the youth and beyond, are looking at very, very high aspirations, and Maruti becomes the perfect ownership for that. So I see no let up. I think these are very, very good opportune times to accumulate Maruti, but have a window of 1 year only, then you will create the real wealth. So definitely from my side, what names you have taken are accumulate at these levels.
Okay, thank you, sir. I have one more question regarding IndusInd Bank and ICICI Bank. What is your view on these two banks?
Yeah, good part. Now, IndusInd has been one of the also huge wealth creator, but you must realize IndusInd has one of the largest market share on the CV side lending, that is the commercial vehicle. IndusInd is promoted by the Hindujas who own Ashok Leland also, and hence we know that if there is a slowdown on there is a slowdown in autos, which is globally there, then definitely there is there is pressure that there could be pressure on margins on for IndusInd. Secondly, IndusInd also has an exposure to ILFS and they provisioned some of it, but some of it is again a weakness in their asset quality. So there is talk that this quarter again there could be pressure on the NIMs and extra provisioning. But like I said, don't look at IndusInd just beyond this, because if you look at the next 6 months, then the price which you are getting now is a price of entry, and I would definitely be very bullish. ICICI has led from the front. You've seen the change in guard on both those banks once the agony aunts have gone, and I think that ICICI Bank definitely is a buy on all declines or an accumulate. We think that it being one of the premium banks is going to be one of the FI favorites when they buy this stock. And we've seen CASA improvement, we've seen loan growth improvement, even though slippages were a little high, but I think that's one quarter back. So I think these two stocks are to be bought again on all declines.
Okay, sir. Thank you very much.
Thank you. Next question comes from the line of Rajan. May I ask your question, sir? Mr. Kansara, you may ask your question.
Sir, I wanted to ask that if NDA wins the majority, then what is the chance of Nifty to cross 12,000 before after immediately the declaration of the election result?
A very good probability, because I definitely think if NDA comes with a majority or with a quasi majority, if there are 30-40 seats the NDA will get 290. Then I definitely think it should be a cause of applause. And given that pessimism has come before the event, it's a good sign. Otherwise, if you had already been at 12, then there would have been no room on the upside. So now there will be a room for 700-800 or maybe 1,000-point rally. However, it may not sustain, because we have to see what the global context is and what the earnings are. Earnings selectively have outperformed, but a larger part of the consumer stocks have definitely been on the weak side. But like I said, don't look at the next 3 weeks or the 4 weeks. There will be volatility. Look at the next 6 months, because that is when, if this NDA government comes, you will really be seeing a lot of the broader market outperforming. And that's what my call is. End of October, November onwards, the real cycle or the next new bull market will come up with a huge emphasis.
Thank you, sir. Thank you.
Once again, participants, if you wish to ask a question, please press 7-1 and then star on your telephone keypad. I repeat, participants, if you wish to ask a question, please press 7-1 and then star on your telephone keypad and wait for your name to be announced. We have a question from the line of Aved Desai. The line is unmuted.
Hello. Sir, just a view on that one. I'm holding long from 402 levels.
Which stock is that?
A view on that one. I'm holding long from 402 levels.
Yeah, good. Now look, Dabur has been the first consumption stock which has shown weakness, and that was something which was unexpected. Dabur has been a huge wealth creator, and we know, but they've definitely shown a slowdown. Volume, margins, both have fallen. But look at the pedigree of the stock. They are into it. They are launching new products on their portfolio, and I think this 350, 360 maybe some consolidation. But like I said, this is another time where you should be looking to buy more. Maybe one more quarter you could see weakness on the numbers front, but the price definitely from October quarter should start to see an uptick. We think that like I said, durables, discretionary and staples, all these three have been hit because of the fiasco of tighter lending and some pressure on the competition. But given the pedigree of the stock, I would definitely be very confident to buy it at this level and sit through. So the idea is that maybe the easy money was made in the last 2 months. Right now is a time for investors to hold on to good stocks and sit. So the idea is pakde raho, chodo mat, because if you let go now and once the markets turn, then it will be very difficult to re-enter. Weakness is a good time to buy. So I would say recommend would be to buy Dabur on all declines.
Thank you very much. Thank you, Mr. Desai. Once again, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad and wait for your name to be announced. I repeat, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad and wait for your name to be announced. We have a question from the phone number 9899578822. The line is unmuted. Shall I announce for more questions?
Yes.
Once again, participants, if you wish to ask a question, please press 7, 1
यहाँ पे
and then
queries आ रही
star
हैं,
on your
इनका कुछ नहीं
telephone
करना।
keypad and wait for your name to be announced.
So थोड़ी कॉफी दे दी। अच्छा।
I repeat, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad and wait for your name to be announced. We have a question from the line of Rajan Kansara. The line is unmuted.
Sir, one more question. I am holding the call of India Bull Housing Finance of 760 with the price of 23. So, should I hold that or should I?
I think the market is going to be very volatile. The cost of money is high, and you are now taking a chance. So we've seen that NBFCs have been weak. In fact, the Bank Nifty has fallen almost 1,800 points from 30,700, 3,600 to below 28,900. So my call would be that either you write to out of money calls and try and safeguard your premium because the premium will be scarce, or then taking a chance would be the key. But long dated options will still retain some of the premium till we get to the election results. The day the results are out, then that day the premium will fall. So be quick with it. Try and sell to out of the money calls of a higher strike and try and protect your capital.
Okay, sir. And one more, it's a Syntex plastic technology I am holding is the price of 62. So what is the future, or should I hold it, or should I double the stock, or what?
Is that Syntex plastic?
Yes, sir.
Yeah, Syntex has been in the eye of the storm. They hyped up their company. The plastic business is doing well, but they still have a lot of debt from overseas on the FCC borrowings, and that has been a problem. The business is good, and we are seeing that the infrastructure side will see upside. But I would rather try and get out of that and get into a quality name on these corrections. select auto stocks are giving you good entry points. I would say Ashok Leland or an Eicher or a Bajaj Auto, where I think the visibility and brand will make much more money than staying put with a stock which has underperformed. So I would say use rallies or presently get into an Ashok Leland at this 83, 84. I think that can give you a 25% upside in the next 1 year.
Yeah, thank you.
Thank you. Next question comes from the line of Shikha. The line is unmuted.
Hi, sir. Can you just please suggest some optional strategies for Nifty, sir, for this particular month for election?
Well, Shikha, drop us a mail. We'll try and give you right now on the spot. It would be difficult. But like I said, the premiums are very high. And the premiums are high because of the event. And rightly so, you will be able to make money if you are quick-witted on that. But write to us. We'll give you a strategy by Monday positively on this.
Okay. How do you feel, sir, this Nifty 13,000 call?
30,000 call is, well, I'll be delighted if you make money on that. But on a lighter note, but I don't know, 13,000 seems very distant away. Try and get into the 12,000 bracket. That would be even more better. But, God knows if something does come out as a miracle, then we don't know. I'd be very pleased, but I think that is very, very far-fetched.
Okay, sir. Fine. Thank you so much, sir.
Thank you. Once again, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad and wait for your name to be announced. I repeat, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad and wait for your name to be announced. Next question comes from the line of Kailash Vyas. The line is unmuted.
250 quality of Reliance Industries from last 3 years, but this week the stock is falling very sharply. So what is your advice, sir? Because my 15% portfolio is from this stock only.
Which one is that?
Reliance Industries, sir.
Reliance Industry, but Reliance has been a huge wealth creator. So don't get deterred by the short term. I still think in the next 1 year, Reliance will be a 10 lakh crore company market cap. So all these declines are brokerage houses selling. I think that please hold on. 1700 would be my target in the next 1.5 years. So stay put with Reliance. This is mayhem because of the volatility and brokerage houses. Reliance is a wealth creator, and definitely Geo and the other businesses are doing extremely well, and they're looking to monetize some of their energy businesses, which will reduce the debt and improve the outlook for the future. So my call would be please hold.
Sir, one more question, sir.
Yes.
Sir, I feel that whichever government come, it will focus on infrastructure. So shall we start pick up good quality infrastructure stocks like L&T, PNC, Ashok Buildcon? So what is your IIFL views on this infrastructure story, sir?
Yes, and I mentioned the 4 C's: cement, construction, Capex, and corporate banks. So construction and Capex will relate to L&T. L&T, you are right, is my top favorite over there. L&T, ABB, Siemens has just diversified or demarked some company. You can avoid that. But Sadbhav Energy, Sadbhav Engineering, Dilip Buildcon, all these are looking extremely good. So L&T would be the top pick over there, along with maybe a Thermax and an ABB.
Thank you, sir.
Thank you. Once again, participants, if you wish to ask a question, please press 7, 1 and then star on your telephone keypad. Participants, if you wish to ask a question, please press 7 1 and then star on your telephone keypad. Participants, if you wish to ask a question, please press 7 1 star on your telephone keypad. So there are no further questions from the participants.
Okay, then thank you all. And if you have any queries, please drop us a mail. We will try and make this a regular feature. But like I said, the sprint may be over. Look for the marathon. The next 6 months may be a little range bound, but I think October and November onwards, markets are going to be on a very, very strong wicket. So stay put, hold on to your stocks, and wish you all the best. Happy investing. Thank you.
Thank you. That concludes this conference for today. Thank you for participating. You may all disconnect now.